say that to them, and then to punish the rich simply because of the locations where they live. I am not one for subsidy, even if I also promote government interventions. But I have a problem. Have we a credible power structure, a power cost structure audit that we can expose to Nigerians for a critique? I'm not sure there is. The last time I checked, there was one that was funded by the UK government for about 2018, 2019. So I'm not exactly sure what the cost structure it is that we are using today to determine that to recover costs in electricity, some people should pay 225 naira per kilowatt hour. I just checked this morning. Ghana is still paying 185 naira per kilowatt hour as at today. And that is for a country. For many years, we had an office in Ghana. We didn't have a generator. If I were to ask this morning, if you have 20 hours of power, can I see your hand? Please. One. Just one person. Incredible. I'm not going to ask you how much you pay for electricity. Yeah, I get you. And I think for me, this demonstrates what we have done. I think we've put the cart before the horse. We need to interrogate the cost structure, one, and to be able to verify that the people you are asking to pay 225 actually get power 20 hours. Our office is in Ikoyi. We buy because we have a prepaid meter. So we are being charged at 225. In the last month, there is no day we have gotten power for more than 8 or 10 hours in 24 hours. And we are regarded as band A. So as I said earlier, my problem is not about bands. It's about how, we are applying this. And my problem as well is not about government intervention. Because even governments in Europe today are intervening in various areas, especially when it comes to energy. Why is it, for instance, that the total grid power supplied in Nigeria is still hovering around the level it was before General Abacha died? Actually, coming here this morning, I saw a very big poster on a car of the photo of General Abacha. I'm sure there are some young ones in our midst who probably won't recall who Abacha is. But when he died, our grid supply was between 3,000 and 4,000 megawatts, and that's where we still are. In power, you would imagine that the more power you supply, the less the unit cost. As Nigerians, we have absolutely nothing to do with how power supplied has remained at 4,000. So why should we be punished? If you were in the church, you would say, praise the Lord. I also need to know, and I'm sure you also want to know, why our oil production is now back to where it was in 1992. 1992. During the work of Vision 2010, and I am proud to have been part of that work in 1998, one of the key recommendations of Vision 2010 was that by 2010, Nigeria should aim to attain an oil production level of 4 million barrels a day. And all the oil industry executives, whether they be Nigerian or expatriates, were all agreed that it was an attainable goal. That we are at a level that we are not very proud to speak about. I have frequently asked myself, and I'm rounding up now, a very provocative question. And that is, Nigeria's proven gas reserve is about 2/3 that of Russia. 2/3. But Russia earns about $1 billion every day selling gas to Europe that does not want gas from Russia. And in our own case, what do we have? I was at a forum some times ago when the managing director of the liquefied natural gas company was telling us that virtually every week he gets a call from a European ambassador asking, how do we get more gas from Nigeria? So you ask the question, what are we doing with such humongous gas reserve or gas endowment that is equivalent to 2/3 that of Russia? When Madam came in, and even today, I think it is fair to say, we are still believing that it will no longer be business as usual. We have chosen a closed session this morning so we can promote an open, candid, and honest engagement. So we don't have the media invited here today for the simple reason that we think that as a people, we should tell ourselves the truth. I am hoping that we can achieve that this morning. Let me end by offering our profound appreciation to our sponsors, the major Energy Market Association of Nigeria, and of course, Alex, a law firm that is significantly involved in structuring energy deals. We thank you very much for your support. I'd like to welcome you once more, ladies and gentlemen, and especially our keynote speaker this morning, and our panelists for choosing to spend part of your day with us this morning. And for the rest of us, I promise you, this will be a robust engagement, not just, as I said earlier, about prescriptions, but truly about how to move the envelope. I thank you very much.
Thank you very much, Frank. And on to the next, I will invite Mrs. Olu. Forgive me, but I'm going to give a good shot. Vehihen, who is Special Advisor to the President on Energy. She'll be talking about future of energy, enhancing investment climate in Nigeria's oil, gas, and energy sector. Mrs. Olu Vehihen.
Good morning, distinguished ladies and gentlemen. It's Verheyen. I know it's a tough one, but it speaks to the history of Nigeria and how diverse it was at some point. A Dutchman made his way here in the 70s, and hence I have a Nigerian last name. So, good morning, everyone. Thanks for having me. I'm really honored to be here. There have been a lot of thought-provoking questions there, yes? It's really important to, so I'm just going to go off the script and just speak from my heart and from my mind based on what I know has been our history and what has kept me optimistic and what I think should keep all of us optimistic. So the data is true, yeah? This is an industry that is critical to Nigeria and has been. It provides over 90% of our foreign exchange earnings and over 60% of our fiscal income. That is a blessing and a curse. We should have diversified our economy sufficiently since 1958, the first well in Oloibiri. But because it is so critical and the energy transition is accelerating, we don't have the luxury of time anymore. So before this administration came in, a lot of time was spent trying to understand the root cause issues within our sector so that we can find permanent and sustainable solutions to some of those challenges. It's the first time that a special advisor has been appointed to cover energy, because we recognize the importance of coordinating everything from upstream, midstream, and downstream, and making sure that the oil and gas sector was also fully integrated in its policy outlook on the power sector. We have over 290 TCF of gas. We're one of the largest reserve holders in the world, but we have not been able to convert that to monetization, to the level of monetization that we should have. So we went back. The PIA took 20 years. That did not help, because in that time, other sources were discovered. So we now have more competition, even on the continent. But when the PIA then eventually came, it addressed some of the fundamental issues, not all. No law is perfect. AG is now still, associated gas is still competitive for investments and has improved in many ways. But the onshore issues, the security issues, means that every time a pipeline is hacked into, no matter how attractive your associated gas investment is, you're not going to invest because you cannot get that oil barrel to the terminal and monetize it. So we shut in oil and we shut in gas. And so at the time the administration was coming in, NLNG was averaging about 50% availability. It's the first time it's been that low. Sometimes it's even over 100. Things are, some of the actions and activities that we are taking are outcome-based. So when you spend money or when you intervene with technology, with human capital, that you are actually improving or delivering more cargoes into the market and more barrels into the market and into the domestic market. As a result of those security interventions and taking an outcome-based approach, NLNG now averages, its utilization rate for the first quarter was about 70%. Production has grown an additional 200 barrels and still growing, and we intend to continue to make those gains. But that's not sufficient. We recognize that if we are truly going to address reliability of gas supply, we need to make non-associated gas fields much more attractive. And when we looked at our non-associated gas economics, we benchmarked our returns, our government take, to jurisdictions, to other gas jurisdictions, globally and regionally, and found that we fell short. And when you think about the investors that invest in this market, they have an opportunity set that is regional and global. So when the board is making a decision, and I used to sit on that side, they basically say, well, this is not attractive, so you don't rank, and you don't get the capital allocated. Again, like I said, in the 20 years it took us to pass PIA, many other competitors have arrived on the scene. So we're no longer the only bride in town. 20 years ago, when I started this, when we would engage our colleagues on the public sector side, they would say, well, leave it in the ground. It doesn't really matter. You remember that. But now I think the president, luckily, comes from the private sector and understands, he has a commercial mindset and is in a hurry to make sure he delivers prosperity to most Nigerians. So, and gas is key to that. So what we did was say, okay, let's take a look at our non-associated gas fiscals, and we want to rank top quartile in everybody's portfolio. And how do we do that? We don't want to impact the already scarce fiscal revenue that we have, because obviously oil and gas operators will ask for more tax holidays and royalty holidays, which frankly we can't afford at the moment. But we need to give some incentives that make us competitive. So we started to look and had to get creative around the types of incentives. So we established some fiscal principles. First, we won't touch current revenue. Second, we'll make sure we keep to this approach of outcome-based incentives. We've done that on the security side. We saw the dividends, and so we will make sure that the incentives that we're offering as well are tied to production. You get them if you produce. You don't get them if you have high costs. You don't get them and to park it on your slides and continue to consider. So those are the main principles that we had. We recognized that a law was required, a change in law was required, but again, there are certain things that are not within our control. We have a cooperative National Assembly at the moment, and we are quite optimistic that we will be able to make those changes in law. But then we looked at our pipeline of opportunities that we really wanted to accelerate and decided to go down the route of presidential directives and seize the opportunity to address some of the core issues as well in the oil and gas sector. You'll recall that very early on in the administration, we worked with NUPRC, the upstream regulator, to invite a lot of the operators in our market and to understand what their plans were for Nigeria and what enablers were required on the public policy side. Some of them were regulatory enablers, and NUPRC has been great in taking on a lot of those initiatives and driving the reforms there. But some required a presidential level intervention, and that's sort of the three directives that you've seen. So on the NAG side, we said we'll offer fiscal incentives, and we've done so. When it came to other issues, there were two main issues that came up, that kept recurring. Our costs premium are high. Part of that is due to security challenges, but not all of it. We found that if going through our root cause analysis again, that the process for contracting for any service was much longer than any other part of the world. I mean, to put a contract in place could be as high as 4 years, where in some places that's 6 weeks, 3 months. So the longer you drag that out, the higher your costs are, the less attractive you are to the contractors because they move on. As I said, there are many other places they can go. So we found that unacceptable and decided that while there may have been good reasons to have those sort of governance structures in place many years ago, our context had changed, and there was a sense of urgency that needed to gave the impetus that we needed to make these changes. So what did we do? We sat with NMPC. NMPC luckily had started this journey already around an SLA and an MOU to shrink their governance processes and enable quicker approval times. But we felt that a presidential directive was also required to help make to give NMPC more power and more support to make further changes around those governance processes so that we could achieve the objective of reducing those timelines. And there were 3 actions that we decided to take under that directive. First was to increase the limit, the threshold contracting limit at which NMPC intervenes in your contracting processes. Again, we took a data-driven approach to that. We looked at roughly how many contracts fell under that based on a sample set. And under that sample set, you found that there were a number of contracts that fell under that, but the value of those contracts were actually pretty low. So we were applying a level of rigor to a lot of activity to a significant number of contracts that actually that didn't have significant value. I.e., if an NMPC wants to have oversight and make sure that every barrel, there's discipline and costs and all of those things, that it was which was the point of those governance processes. It was stretching itself through too thin by doing it for every contract. You apply the same processes and the same timelines for a $250,000 contract that you apply to a $100 million contract. That clearly is not efficient, and would explain why it takes you 30-something months sometimes to put a contract in place. So in raising that threshold and reducing the number of processes and gates that you have to go through, as well as the timelines in which you go through those processes, we believe that we will be able to reduce our contracting timeline to 3 to 6 months, or at least in line with roughly average global standards. So that's the subject of the second directive. The third issue that came up that we found was driving costs. up was our local content law that had now had unintended consequences. It is important to have local content. One of our biggest exports is Nigerian talent in the oil and gas space, actually. Shell has been exploring here since 1938. So there is no room that you walk into here or globally that you will not find a highly qualified Nigerian. So it's something to be proud of, and it's something to build upon. What we wanted to do with the NCDMB Act was to make sure that our value chains were also domesticated, so that we could create opportunities for Nigerian businesses and for Nigerians, so that they have opportunities, and then we are participating in all parts of the value chain, not just selling commodities. However, some people took advantage of those laws and built the capacity that needed to be built, and some of those companies are now competing regionally and are strong. However, there are some who are briefcase holders who basically sit in the middle and seek rent and drive up costs. The president said enough. And so, while we're constrained by law, we've asked NCDMB to do two things until we make those legislative amendments. One, take a look at the capacity in country. And when there's genuinely no capacity in country, make it easy for the operators to access competitive prices on the global market, as opposed to insisting that they have to go through a Nigerian middleman. The second bit is to also look through their processes and see where they can collapse timelines and their governance processes, pending amendments of the legislation. Again, we found all the parties to be actually quite cooperative, because nothing rallies people more than if you put Nigeria in front of them. It is no longer about maximizing your own scorecard, whether you're NCDMB or NMPC or NUPRC or NMDPRA. It is about maximizing Nigeria's benefits. We need to create jobs for 100 million people. We need to grow incomes at accelerated rates. We need to diversify our economy. We need to turn our gas into petrochemicals. We need to power, because without power, you can't actually diversify your economy. And as Mr. Ibogun said earlier, we've been stagnated at roughly the same levels of distributed on-grid power for a number of decades. So without addressing these issues, we felt we weren't going to be able to make progress. As I said, there's a that we could go through a legislative process, but it was important that the president send a signal to investors that it was no longer business as usual, and will take whatever actions are required to deliver prosperity to Nigerians in the quickest time frame. So that's roughly the subject. That's roughly what we did on the presidential directives. On gas to power and electricity tariff bans. You'll see that it's not been a shortage. We've had some really talented ministers of power. There hasn't been a shortage of talent in trying to address this. One of the issues, I think, one of the challenges that we recognize was this lack of coordination and integration. 80% of our power plants are gas-fired on grid. So what does I used to be a gas supplier, and I know what I would ask for if I wanted to sell gas to power. One, I need to make sure that power plant customer can pay me on time, without any issues, so that I can guarantee my rate of return that I take. And because I'm taking significant risk on the gas side, it is not cheap to make gas investments, that I have a customer, an off-taker, who can underpin my investments for at least a decade, sometimes more. Our power sector was not actually, did not even have a commercial framework for that until about 10 years ago. 2008 is when we started developing those frameworks to make sure that under the gas master plan, that there was actually gas agreements, liquidity challenges being addressed. On the power side, one of the major challenges has been on the discos. We decided to privatize, and the sequencing of that is a subject for another day. The selection of the people who made those investments is a subject for another day. It's one of the things that we have decided as an administration to always ensure that going forward, when we're transferring assets, that we make sure that people have the financial and technical capacity to deliver. The discos, unfortunately, most of the owners did not have the technical or the financial capacity. I think a lot of people thought this was another telecom deal. It's super technical, and it requires quite a bit of capital. One of the premises was that you would, one, make sure that you are able to collect data, and you don't do that unless you invest in metering. Till today, over 60% of customers are unmetered. There is no way for you to understand where you should send power to, who can pay, how many hours you're delivering. And the fact that we're even using hours as one of the gas giants is something that we need to move on from. It should be consumption-based, but because we don't even generate enough electricity to guarantee 24 hours of electricity, we're now using a service-based tariff that is that we hope to phase out soon. So one of the quick things that we looked at is to avoid the temptation that other administrations had, which is to focus on the supply side of power. It's very easy to build gas plants, and a lot of politicians love to commission those things because within 18 to 24 months, you can go and be cutting ribbons everywhere and say you've done something. But what we realized very quickly is that we have about 14 gigawatts installed. We can only transmit 5 to 8, or the capacity is really capped at 8-ish. And as you said, over the last decade, at least since privatization, distribution has been capped at 4. So even if you were adding more, so you have quite a bit of stranded generation capacity. So there is no need to work on that. The idea is to make sure that you, one, are able to evacuate what you have and distribute what is evacuated. You cannot, and in terms of sequencing, where do you focus? Even if you started building and increasing your wheeling capacity at TCN, there is still no capacity to distribute. So the focus in the short term is on these distribution companies. How do you make sure, one, that they have the financial capacity and the technical capacity to continue to make investments in densifying the grid? Most places, whether you're in EcoDisco, there are only about 3 of them that are kind of financially viable. The rest of them are struggling. So what does it make sense to intervene? Because if the discos do not collect enough revenue, we are not able to attract any investments into the transmission or further investments into the generation, and definitely less and less gas supply will make it into that power value chain. So we focused on making sure that the financial viability and commercial viability of the power value chain or electricity value chain is being addressed at the disco level. And there are 2 main initiatives that we're working on there. It's making sure that, as I said, we attract capital and catalytic capital, and the government puts down catalytic capital to ensure that we are able to attract more capital to the disco end. And one of the main initiatives of the administration is the Presidential Metering Initiative, and to make sure that almost every customer is metered, anyone who's connected to the grid, as far as we know, that we close that metering gap. There are about 7 million meters that need to be added. And once we do that, the discos have the ability to collect more revenue. And if they're able to collect more revenue, they should be able to invest in densifying the grid and being able to invest in more delivery distributed capacity and reducing their losses. Second issue is really around ensuring that there is transparency around where power goes. So we've decided that you don't only add metering capacity and deploy hardware, you deploy technology, so you have insight into where you should be deploying investments to, what kinds of policy changes you need to. Truthfully, we've been flying blind because we actually don't have the data to help us make investment and policy decisions around how you grow electrification. So we've started off with saying, let's actually make sure every customer is metered and we understand where losses are taking place. Currently, the average loss, so for almost every kilowatt of electricity that's sent to the grid, it's only about 60% of the revenue for that you collect. That's not a viable value chain. So how do we drive up in the short term the revenue collections and allow those incremental revenues to drive investments into areas that we know now need it? In terms of subsidies, one of the key points and key, I'll say, thrust of this administration is that we will no longer have regressive subsidies. When we looked at the PMS subsidy, we realized it was the elite that were benefiting from it. Many people who have SUVs, there are several SUVs that brought you plus your security guard cars. So the bulk of consumption wasn't actually the Nigerians who need it. So it was basically saying, let's make sure we end that regressive subsidy and channel those funds into things that benefit most Nigerians. When you come to the electricity sector, we looked at, we needed to make a change. We had, when looking at about 3.3 trillion in fiscal federal obligations to amend to just fill the gap between what we think is cost-reflective tariff and what we allow the regulator to charge. Given the tight fiscal space, there isn't sufficient money to keep prices stable on every segment. So we made the call, and it was a difficult call, to say, for those who have, that NERC has assured us, have 20 hours of electricity, and that includes myself, not always, but on average, that we pay our fair share. And and there's always a sequencing issue, I take that point. What do? Do you try and find 3.3 trillion first while you go and interrogate the level of the efficiency of cost reflectiveness for a broke government? Or do you say there are people who have capacity to pay more than 60 naira and increase that price and ensure that NERC then does its job as a regulator and making sure that only the people who are averaging 20 hours a day are getting charged 225 naira. NERC, I know, has started sanctioning discos. I know since we've instituted those tariffs have moved a lot of customers off Band A, because one of the benefits of insisting that people pay market price is that they're more vigilant on whether or not they're getting 20 hours. And because when you pay the fair price for it, you pay more attention. When it was 60 naira, no one cared. So So now NERC has the obligation of making sure that discos only charge those who get 20 hours. If they don't get 20 hours, they have to move into the lower bands. The second piece is that it puts a lot of pressure on the discos, because now they have to make the investments, and really they're under pressure. You say you want cost-reflective tariffs. Here are some cost-reflective tariffs for these customers. So on average, make sure you enter into the agreements or find the investors that will help you make the investments to densify the grid. There are franchise arrangements that they can make, pending when we can get additional capacity on the transmission and wheeling capacity. Within the discos themselves, there's opportunity for embedded generation to actually start making those investments and improving electrification to those customers. So the second thing that it does is hold discos accountable to make sure that if you say you want a roughly cost-reflective tariff, here it is for this band of customers who we believe have the capacity to pay, but you must deliver the service. And if you don't, you have to start looking for ways and investments and partnerships that allow you to do so. We believe that's the way to really start moving the needle around increased electrification, especially on the distribution end. And that we do not move more customers and we do not have further tariff increases until we have visibility and line of sight to how those people will also start to get 20 hours a week, 20 hours a day on average. I think, no administration is perfect. We are listening one. And we believe that we are addressing sort of the commercial issues and the commercial viability issues, because we believe that if our jobs as government officials or public officials is to create an enabling environment for private sector capital. We do not want to be in the business of investing in every sector. We want to intervene in catalytic ways that allow us to leverage private sector capital and private sector expertise. But our focus is really on enabling policies and enabling investments. We're going to continue to do so on the power side, We're going to be doing that on the oil and gas side. And we welcome additional information, and we'll continue to engage. On the presidential directives, I remember when it was signed and everyone said, well, Nigeria doesn't have a shortage of ideas. This is a good one. Let's see if they're going to be implementing. We took that as a challenge, and we already kind of anticipated that most people would say that. And within a short time, we've made sure now that on the fiscal incentive, it's very clear what qualifies and how people can take the benefit of it. That was announced this week with the Honorable Minister of Finance. So with working with NUPRC, we've defined which NAG fields will qualify for these incentives. And then working with FIRS has issued the circulars that allow operators to understand how they actually take benefit of the fiscal incentives for NAG. So that's done. On the deep water side, we're starting the same exercise, looking at where we are. There hasn't been an major investment since Egina. That's almost 10 years ago. The elusive 4 million barrels per day cannot be realized without deep water. And so increasingly so, particularly in the face of the security challenges onshore. So that is the next phase of focus for us. What incentives, what cost efficiency is required to ensure that we are competitive for capital and start to realize those FIDs. We are planning to drive implementation of these 3 directives with 3 major projects that have been sequenced for investments. And again, hoping to ensure that Nigerians understand that we're an outcome-driven government. We are issuing directives because we have some projects that we want to make sure and announce FIDs this year. Those FIDs are announced. It doesn't yield production immediately, but it starts to generate enough economic activity. Yards are restarted, jobs are created, people can start supplying to workers. Expats are good things. Yes, we want Nigerians, but we also need expats to come in to transfer technical know-how, but also they spend quite a bit of money. So they help us keep our economy going and growing our tax base and our ability to continue, ensure that there's economic activity pending production growth. So those are some of the things that we're working on. We are excited, and we're very sure that this time there will be, because the approach isn't as technical, and that there are many people in this administration who have sat on the other side of the table, who have sat in boardrooms and understand what investors require, whether you're talking from the president to the coordinating minister of the economy to myself, and to the CBN governor. These are folks who understand what we need to do and have been in private sector and understand this mindset. But there's always going to be a balance, obviously. We're not going to give the house away. We want the investments, but we are clear that we want to be competitive. We're not trying to give the house away so that people come and ask for tax royalties, or we're desperate for investments, and so you bring a shopping list of things that are not actually viable and not in the interest of Nigerians. That's not the case. So there are a number of initiatives that are being rolled out. For the presidential directives, you'll see those FIDs within this next year. We think there are about $10 billion of investments between major oil and gas projects within the next 12 to 18 months. For the electricity side, we're using the presidential metering initiative to improve those collections and ensure the commercial viability of that value chain so we can attract more investments into it. I really thank you for listening and look forward to taking more questions and answers.
Thank you very much, ma'am. So I guess we'll open the floor for a couple of questions. If you don't mind, I think. All right, thank you. So we'll do it in, there's a roving mic behind. So we'll do 3 in groups of 3 and maybe 2 batches of 3. Thank you.
Okay, thank you very much, Mrs. Verejana, and thanks, Mr. Aibobo, for the opening. Okay, so my question was basically to backward integration. My name is Jide Pratt. So my question is basically to backward integration. The presidential metering initiative is great, but I don't see, or let me put this right, it appears most of those meters are going to be imported. I might be wrong, but I mean, you know better. The second thing is also this. One of the things we do is that we make solar lights. Also, back to backward integration. We probably always have to bring in completely knocked down parts. So I don't know what energy is going to do to make it available to at least start this process here and finish it here. Thank you.
We'll take all three, and then
Thank you. That was a very welcome statement. Ibiada Itoto Seplat. My question is about the contracting thresholds, which is one of the presidential directives. I think that comes very welcome to us who are operating JOAs. But in terms of how we operationalize it, is it clear just the way you've done for the issues on the fiscal side with taxes, how we're going to drive this down? Because it hasn't really taken root yet. Are there any plans around how we operationalize that? Thanks.
one more, please.
Thank you. Good morning. Good morning, everyone. Good morning, Olu. Chibuzo Ifani from Vitol. So I have 1.1 question, if you don't mind. So rather than two. Question one, your timeline for the fiscal incentives was 12 to 18 months. How confident are you of that? Okay. Yeah. For in terms of the to see the results. See the results, yeah. Yeah. So that really was my question, first one. The second one is more is tangential. There's a lot of talk about the local provisions for producers to refiners in terms of crude supply. Yeah, allocating crude production to domestic refiners. So if you feel like just commenting on that, thanks. If not, we can leave it. Yeah, thanks.
Okay, so on backward integration, like I said, a key objective of the administration is to make sure that if we don't domesticate our energy value chain, we're not going to be able to create the kind of high-skilled jobs and the number of jobs that we need to make sure that the average Nigerian has higher purchasing power that allows us to leverage a lot of these initiatives, whether it's consumer credit. A lot of the initiatives that we're thinking through at the moment require most Nigerians to have higher purchasing power. If we want to city subsidies, we need them to have higher purchasing power. We need jobs to be created so that they can pay market price for electricity, so that we only then have to intervene for the poor and the vulnerable, you know. The idea is that we make sure that, so when we look at the local manufacturers, the history around metering locally, what we found very quickly, again, looking at if you want to close this gap, if you want an outcome that means that you close a 7 million gap within 2 to 3 years, you have to make sure that the prices are competitive. That hasn't been the case over the last metering initiatives. Quite a number of those prices were high. Again, it's not a blame game. It is because I think we found that there were no economies of scale. There were a lot of small companies trying to procure individually, which means if you don't aggregate the demand and procure and do a bulk procurement, which is one of the key points the key things that we're now addressing in the presidential metering initiative, then you don't achieve the prices. We saw prices that were 2x, 3x what you should be getting in the market. So that's one of the reasons that we're doing the bulk procurement. And we also want international market discovery because, as I said, we are benchmarking ourselves to global markets, not only in terms of our fiscal incentives or our costs profiles, but also how much do things cost, right? So should Nigeria be paying 3x for a meter when really the market price for that is about a third? So the local manufacturers have been encouraged to make sure that they take advantage of a bulk procurement initiative that allows us to achieve the economies of scale and drive down the cost so that we can close that midstream gap as quickly as possible. Even for the international folks, that we may be, so it will be a mix of international and local, as we need that for the price discovery. Even for those international folks, there's an intention to ensure that if they start to localize and they set up their manufacturing plants and their assembly plants in Nigeria. Why? If we're going to be putting more gas and turning into petrochemicals, a lot of the components can come from our refineries and our petrochemical plants. So again, the domestication of that of the energy value chain is a critical one for us. So that's the intent. On contracting thresholds and operationalization, the directive is really clear. NMPC is a limited liability, is a limit, not LLC, what do you call it in Nigeria? Limited company, yes, LTD. So there are strict governance processes. The presidents cannot instruct a company to do something, but we have instructed its shareholders to procure from an NMPC's board an amendment to its governance structures and this threshold with its partners. So what that means is that an NMPC has a JOA or PSC with its operators. In order to actualize this $10 million threshold, it will need to amend that JOA, and it's already in the process of doing that. It started engagements with its operators last week. So it's already in the process because, again, there are timelines to these things. It's gazetted. You really can't break the law. So second piece is to say, you also, there are certain things that we found there. You need to make sure that the contracting timelines, the duration of the contracting is also extended for major contracts especially. Because no one wants to go through this long process of putting a contract in place and have to do it again in 2 to 3 years. We found that also affects pricing. So if you extend the timeline for the duration of those contracts, that helps. So there's some internal processes as well that require board approval. So the directive is to its shareholders for the board of NMPC to ensure that NMPC puts those things in place within the timeline that is in the directive. And NMPC is working with our team on a daily basis on how to do that and how to implement that. For the NCDMB directives as well, we work very closely with the ES and his team, again, almost on a daily basis, thinking through what needs to be done, what can be done within the law at the moment, and then what changes may be required to ensure that an NCDMB delivers on this. As I said, we haven't hit resistance because, one, it's clear, the direction of travel from the president. This is now the 4th presidential directive that he's signed for this oil and gas sector in 9 months. So I think most people have read the room and are lining up behind him to make sure that what he has set his mind to, we achieve for Nigerians. For FIDs, as I said, we spent a lot of time going through we sat with operators and spent a lot of time going through their project plans and what's in line for final investment decisions. And we're confident. So let's go back to one of the reasons we focused on NAG. As I said, the utilization rate at NNNG was awful, so we need more NAG. And then Train 7 itself is far gone in terms of construction, but none of the supply projects have taken investment decisions. So our solutions weren't esoteric. They were trying to address a specific problem. So we know that there are projects that are FID'd. We know that a train is about to be complete. It'll be a national embarrassment for that train to be complete without gas. So we spent time looking through specific projects that need to take investments to avoid a lot of these things and to deliver our fiscal objectives over the short period of time. So we're being conservative when we say at least 3. We know that most of the FIDs for Train 7 need to occur, and we believe that with the solutions that we've proffered, we have now enabled that, provided the other 2 directives are implemented. And as I said, we're taking those 3 projects through this presidential directive. So it has the highest level of attention. There are status updates to the president about where these projects are based on these directives, what's holding it up. So we're pretty confident that at least 3 will occur. Yeah, I think that's it in terms of the questions. Is there anything else? Yes.
So another round of 3. 1, 2. Okay, so the 3 here. Now to our final.
Good morning, everybody. My name is Tunji Oyebanji. I'm with Double One PLC, which is part of the NIPCO group. Mine is a comment, actually a commendation. Usually at fora like this, you tend to get barrages of attacks and questions. You spoke about integration and alignment among government agencies. For instance, a while back, there was a request to take out VAT on diesel. It took forever for that to be implemented down the line. But this time around, we had a situation where for CNG equipment, duty waivers had been given, but still it wasn't being implemented down the line. But I think one of the area where I'd like to commend your efforts and the efforts of the Special Committee on Gas is that that has now been implemented so that for all equipment, the appropriate waivers that have been approved are being applied. So I think it's something we should commend the efforts of government for. Thank you.
Good morning. My name is James Markinde. I work for Seplat. My question is, well, before I ask the question, I need to commend what you're doing, especially around the gas space, your effort around the decade of gas. But as a producer, and I also represent the producing sector really in the gas space, there is a bit of challenge around the debts to gas producers. We have what we call the legacy debt, but now the debt is piling up again, and it's beginning to affect producers' operation. What are we doing about that?
Thank you very much, Elu. I think anybody who's listening to you today would be really reassured and also very impressed. Well done. But then again, I'm not very surprised. So I think listening to you, what I see is I wish that we had this many, many years ago, because what's happening is that we're actually playing catch-up. Because a lot of what you're talking about are things that we should have done before. And my concern is, while we are trying to play catch-up, the rest of the world is moving on. So in a nutshell, really, how are we really positioning for the energy transition? I know that we talk about a decade of gas and the focus on gas, but aside from that, one area that I think may be a concern is that we may find ourselves, when the transition gets further down the road, with regards to renewables and all of that, in the same position that we found ourselves in with fossils, because we actually hadn't gotten ourselves prepared. And so we have the rest of the world coming here and exploiting us. So what are we putting in place? Because a lot of the minerals, for instance, that are required are in existence here. And we're seeing that the foreigners come in here and do the wrong things, and we are losing out on lots of opportunities. So how are we positioning? And what is the integration between your piece and also solid minerals? So I guess there are a few questions in that.
One last question.
Good morning, everybody. My name is Olugbenga Samuel Fale. I am CEO of Saglev. We are electric vehicle manufacturers. We are not new, but we are showing ourselves up new. Thank you very much, SA. I will never pronounce your last name wrong. So I heard it from the horse's mouth. I commend what you're doing. It's very refreshing to hear the challenges from the horse's mouth. The challenges are massive. I want to say that one of my friends in the United States told me that, look, you're going into an oil and gas environment and you are manufacturing electric vehicles. Have you ordered bulletproof vests? Because you might need that. These guys do not play with competition. I said, well, you know, the truth is that we are complementary to oil and gas. So the comment I want to say is, for instance, in mass transit, we're able to cut the amount of CNG or diesel used when you use a diesel bus versus when you use an electric bus, from powering diesel from 18 hours to 2 hours that you use to charge the bus. Can you imagine the cost? Thereby, you're able to utilize your gas and diesel more effectively where you need it. So we are actually complementary to this. I want, it feels like, you know, when you are the stepchild, we in the electric vehicle ecosystem, we are here. We understand the problems are massive. The problems are 63 plus years old. But in the EV space, we actually do believe that we have tangible solutions that are ready. We have been very quiet. We are already going to start assembling in 4 weeks. Yes, but we decided to completely be quiet because we want to be able to show that we can do this rather than announce. So what my question is we want the government to meet us, understand what we're about, consider electric vehicle as part of the solution. We can actually put a dent in the amount of hydrocarbons used. I don't even want to mention about what is obvious in terms of climate change. That's obvious. But in terms of solving some of the problems you've mentioned, we do play a role. So we want the government, they are addressing it now. By the way, the circular by the Federal Minister of Finance clearly addressed electric vehicles. And you've had you did that. So I have to say that. So before, you know, I don't want to, they are actually addressing this. But we want the federal government to understand and let people understand that the electric vehicle ecosystem is here. We're already positively impacting, and we have the ability to reduce costs specifically for the people that you want to reduce costs for. So we want the government to, you know, that's my question, is how can we get you to boost us a little bit?
There you go.
Hello? Okay. It's feedback. Okay. Thank you. Let me start with gas debts. One of the things that keeps my team up several hours a day. So when we came in, the decade of gas, there was the legacy piece that we are still working through because there's a currency disagreement there. Do we owe you dollars or do we owe you naira? And we need to review the contracts and figure out what that says, because correcting for a dollar obligation, on the legacy piece, we've reconciled numbers. I think the only area of difference is what's the currency, yeah? So we know what the numbers are, and once we agree that, there is a plan already that we are developing to try and solve for the legacy piece. It would require some concessions on everybody's part so that we can move forward on everyone's part. So that's on the legacy gas debt piece. On the current gas debt, you're right, and it's one of the major challenges that we were facing, and one of the reasons we had to do an electricity tariff increase. At 60 naira, there was no way to collect enough money to pay distribution companies, transmission companies, generation companies, as well as gas companies. In fact, at that level, GenCos were only getting about 8% of their cost, which meant there was no money making it into the gas aggregation fund or, or to the gas suppliers. So it's one of the reasons we said, okay, what level and should we make sure that we increase this tariff so that we reduce the fiscal burden and start to address the fundamental issues? Because you could spend your entire day looking for money to pay, or you could increase the tariffs so that you have some breathing room and try to get GenCos to about 50% so that they can start to pay and that we can have money to put into the gas fund. So that's roughly what drove that. And we start to, address our funds and now start to take a look at efficient cost tariffs on the electricity side. So with this, as well as making sure that our tariff shortfall obligation is funded, we're working to make sure that we are then able to put on a sustainable basis at least current debt, gas obligation debts, at least the ones that are on the federal government side. I mean, some of your money needs to come from the market. Again, with the metering initiative, with a few other initiatives that we're using to drive up liquidity in that sector, we're hoping that that helps make sure bills are paid for every participant in that value chain as quickly as possible. On energy transition, I like to take a data-driven approach to energy transition. The world is moving on, but renewables are only less than 6%, 7% of primary energy mix. It's grown rapidly, but it's not a significant portion. Yeah, and when you look forward, oil and gas, oil may be less, but gas has a longer leg through the transition. So the death of fossil fuels is highly exaggerated. Yeah, so it's not happening. There is an energy transition has occurred from the beginning of time. From the day the first man decided to start its fire with snapping stones to now us turning it on with gas and LPG, and then in some climates now using electricity for that. And I'll come to your piece. So it is not new, this energy transition. It's over-reported. There are many issues with it. But let me just say what we are doing in terms of recognizing that there is an energy transition and it's accelerating because of technology, and what our role is and what our strategy is. We see ourselves as playing a strong role because we believe that gas is the transition fuel, and we will continue not only for this region, but also globally. And we will want to play our role in making sure that we provide the level of energy security and affordability that gas allows in many aspects of the value of the energy value chain, whether that's on the local side or the regional side. In emerging markets where they're trying to displace and reduce their emissions with gas, not with anything else but gas. So when you look at Asia, bulk of their coal displacement is with gas. So we see ourselves playing a role there. On the African continent, our issue isn't an energy transition. We don't have energy. So we need to make sure that we use every source of energy that is affordable. Obviously, we do so in a sustainable and a clean manner to deliver progress to our people. That is the focus of this administration. So some of that will include clean coal technology. Some of that will include our gas. Some of that will mean producing our oil in ways that reduce the emissions. We have to use everything that we have to deliver progress to Nigerians. So we will, when it comes to electricity, EVs, and I'm glad you got to it at the end, that you're not the stepchild, because first presidential initiative under the CNG, we actually procured a bunch of electric vehicles because we believe that while we think gas will play a strong role in displacing PMS and diesel, especially in the transportation end use in the medium term, that eventually when we're able to solve our power conundrum, that there will be opportunity, and then also obviously incomes grow, that there'll be opportunity for more adoption of electric vehicles. But we are at a point, you've heard some people are barely getting there, only one person is barely getting 20 hours of electricity. So are we at a point where EVs are viable at scale? No. And in every other market, there's been a significant government intervention to make them, to drive up adoption rates. We do not have the fiscal space for that at the moment, but we do have room for testing different investments, like giving fiscal incentives to EVs so that they can come and set up their assembly plants. We believe that there's opportunity for mass transportation in big cities using electric vehicles, especially we drive up our electrification rates there. We've talked to a few EV companies who are looking at ways to have very innovative ways to also help with the electricity conundrum by building out their charging infrastructure that then allow the local areas where those infrastructures are put in place to be electrified. So we're looking at all of the opportunities there because we believe that it's a combination of all of these things that help us achieve our objectives. So you're not the stepchild because you got your presidential waivers as quickly as possible, and we've been processing a few of them, and I actually recognize your name because I signed the letter. So.
Thank you so much, Mrs. Olubayijan. Thank you very much, man. Okay, thank you. So we'll go right to the next. We'll have a panel now. So I will call on my colleague, Dikbo Oladende, who is the assistant editor for Energy at Business Day. He will introduce his panel. It's a combination of people physical and people joining us online. Dikbo, please. Thank you. How would you like this arranged? Is she ready?
Okay, good morning, everyone. And so we'll move right into the panel session, and I'd like to call on the first person, Dr. Biodun Adedikpe, is the founder and chief consultant of Adedikpe Associates Limited. Please let's give him a round of applause. And the next is we'll call on Mr. Ob Stockman, the managing director of NNPC Retail Limited and the chairman of Major Energy Marketers Association of Nigeria. Please let's give him a round of applause. Also, we'll be calling on Mr. Tona Ejofo, is the head of Debt Solution, FBN Quest Merchant Bank. Please let's give him a round of applause. And we would also like to call on Mr. Sina Sipasi. Shino, okay, sorry, Mr. Shino Sipasi, so sorry. Is a partner and head of Energy Natural Resource Practice Group at Alex, sorry. Okay, so we'll move right into it, and I think the first person I'll be asking the question is Dr. Biodun Adedikpe. So we've heard about the prospect of having the executive order, and we've heard about the impacts it's going to trickle down to Nigeria's economy. So we'd like to get your take. So in terms of numbers, what are we expecting? Okay, oh, sorry. I'm sorry, just a minute. So the last speaker, Clementine Wallop, the director of Sub-Sahara Africa, Horizon Engaged. Can you hear me? Can you hear us?
I can. No wahala, Deepo. How's things? Can you hear me?
Yeah, fine. Oh, sorry.
Okay, everything is correct. We can proceed.
Oh, okay, nice, fantastic. So back to Dr. Biodun Adedikpe. So I'd like to get your take. What are the benefits of having these executive order? trickle down to Nigeria's economy, and when can we expect that double-digit growth that we desperately desire?
Very much. Let me express my appreciation for being a part of this panel and also contribute to this conversation. Now, the presidential directives have been rolled out, and critically, two important things for me here. One is to change the narrative of O&G, and then secondly is to connect to the economy. Now, the special advisor mentioned something earlier, and that is the significant role of the oil and gas sector in our economy. One is looking at the numbers, as you said. 90.1% of our foreign earnings is from hydrocarbons. And then you look at the other side, and that is where I think the real issue is. Contribution of O&G to our GDP, taking 2023 numbers, was 5.78%. So it then means there is a disconnect between the oil economy and the non-oil economy. Now, it's a phenomenon I've been familiar with since the 1970s. You know, in our days as undergraduates in the university, we've been always talking about it. Oh, the oil sector is an enclave. All right, so the question critically for us now is moving in the direction of what we generate from the O&G sector to develop the non-oil economy. And that I see is kind of reflected in the direction these presidential directives are pushing. In which case, how do we create jobs? And then how do we grow the economy inclusively? So what this means then is that as we create opportunities for energy availability, that's electrification, and then also, and we've said this over the years, okay, Nigerians by our nature, we are hardworking and entrepreneurial. So the missing gap has always been the power, all right, to drive the economy. So if we improve in that regard, then the possibility is that we gain traction to grow our economy in the direction of double digits. But of course, again, the other side is logistics, because O&G is very critical when it comes to logistics. And also, more importantly, is what I term the last mile. So which means, if we talk about logistics, now what are the cost implications of all of these initiatives and directives? And I will bring a dimension to that. Critically, there's still a need for intervention. We all agree on that. But there's a way it should also be done, as it happens in other geographies. And that is what we say in terms of fiscal management, all right? Transparency is number one. Happily, the special advisor mentioned that earlier on. Second critical issue is accountability. And then what we call horizontal and vertical involvement of stakeholders, which means engagements like this should be ongoing. So if we are able to do that, everybody gets involved, government gets also real-time feedback on what their actions are. Then we can see the economy moving in the direction of what we want to see. And that is ultimately double-digit growth. Even though in the near term, 3, 4, 5 years, we may not be able to drive it beyond maybe 6, 7% if we are consistent with this. But talking of double digits, maybe look further down the line. Thank you very much.
Oh, thanks. Thank you very much. So I move on to Mr. Obstockman. One of the major key area of this executive order would be to unlock the development of non-associated gas in Nigeria. I know your members have been keen about gas. I know you've been talking a lot about alternative energies as well. I mean, I would like to get your take on how ready are we for this development in Nigeria.
Okay, thank you very much for the question, and thank you very much for inviting us. I think the members of MEMAN in all different stages of rolling it out. Yeah. So if you would focus it only on CNG, yeah, then we've got the likes of ourselves, Double One under NIPCO, MRS that are actively now moving forward on that one. because we recognize that the energy mix in Nigeria has to change. Yeah, we might have been traditionally very much around PMS and HEO. I think in the last years, LPG became important, and LPG will remain important as a fuel. Let's not walk away from that one. But CNG is now the next on let's say the energy mix one, and it's all. And I think it was said, yes, it will be very much going on into the commercial market, where the economics are very clear for a truck or a bus. But we also believe that actually for the cars, the taxis that do quite a bit of mileage a year, actually CNG will also make a lot of sense. So I think now CNG is an investment that is not is quite capital intensive. CNG, it's not an easy add-on where you take a couple of dollars and you just plug it onto your site. So you need to be very clear where it makes sense. We need to do it safely, so we're very much working with the MDPRA that we can put it on our sites because it's got certain distance requirements, for instance. So you will not see easily on thousands and thousands of sites CNG because many sites will just not have the, let's say, the regulatory space to do it. But there will be, we are progressively all investing in it. We are all, but we'll have to walk a little bit before we run. I think that's the honest thing. CNG is untested in that sense, as let's say, not in the commercial market, but especially in the private market, if you want to call it like that, it's a bit untested. So you need to test it out. And what I've always said, and I said this in the past, it has to go hand in hand with conversion. Look, it's nice to invest on a site, but then basically, and we'll probably have to create ourselves a little bit the market. You can always say it's a bit like with the LPG. Let the government put in, what was it, 1 million LPG cylinders. In my view, and I come of course from a Western environment, that's not the role of government. Yeah, the government should enable it to be put in the market. It should be an enabler, not necessarily a doer. Yeah, it sounds a bit. Hope I'm not speaking out of turn here, and I'll have to pack my bags tomorrow. But that's a different story. Yeah, but the same is a little bit with conversion of cars, especially, which will need a bit of support one way or another. Just to say to government, put 1 million kits into the market is good if they show an example. Yeah, to start the ball rolling. But the private industry will have to pick up that ball, in our view. But it's good if the government then supports us taking that role over. So it's not just about putting the kit in, yeah, and having the product. It's then making sure you actually have to create some of the demand, and making sure that people, like I said, see the benefit of it, both from not only from a pricing point of view, but also from an accessibility point of view, and ease of use, etc., etc. So I think that's in.
Yeah, I mean, fantastic. So just a minute, we need to quickly change the seat arrangement. I discovered the light is entering their house.
Oh yeah, I'm feeling very exposed here.
So please, just a minute.
No, that's helpful.
Okay, so I mean, we would like to hear the view of Clement and Wallop. Can you hear me?
I can. Can you hear me?
Yeah. Yes. Fantastic. So,
good.
You interact much more often with oil majors in Nigeria and with oil companies in Nigeria. So we'd like to get your view. How are they receiving these executive orders? What are they saying in terms of their outlook like, and what are you looking at going forward?
Firstly, thank you very much for your kind invitation. I am very sad that I can't be in Lagos. As those of you who know me personally know, I really enjoy coming to Lagos. So next time. We work at Horizon Engage with operators who are in Nigeria and operators who are looking at getting into Nigeria. And let me say that these directives have been received as an unequivocal positive. They are good things that show a good degree of engagement and responsiveness from industry, from government to industry. I've sat in meetings where people have been extremely excited, particularly by the non-associated gas provisions. And that's companies who are not yet in Nigeria. They're looking around, they're thinking, where should we go? And that energy provision is the thing that specifically is now drawing them towards Nigeria, which of course was the government's objective in a highly competitive market. I just would like to moderate that by saying that as the essay mentions, there are concerns about implementation and execution, and particularly around the number of government stakeholders who are involved here. I believe, and correct me if I'm wrong, that we're looking at President's Office, of course, SA's office, 5 ministries, 2 regulators, local content agency, and an NPC, and FIRS also. So that's a lot of different ducks needing to get in a row. It's a lot of different parties who need to work well together to make this all happen smoothly. And again, as Mrs. Vahayan mentioned, there's the legacy of the PIA, the fact it took 20 years to pass that, and parts of it are still being implemented. So I think you will find operators who say, we're really, really excited about these directives. We're really glad to see government taking these steps, but we don't want to get ahead of ourselves, assuming that the execution will all go very, very quickly and very, very smoothly.
Interesting. I mean, that's a very interesting feedback, and would move on from there. And I would like to hear Mr. Tona Ejiofor's view. I mean, you've heard everything in the room. What are you looking at in terms of investment outlook? Where do you see investments move with this new direction coming on board?
Okay. Thank you very much for having me. I think to respond to that, I would like to put a bit of context, right? If you look back, perhaps in the last 10 years, thereabouts, you would find that the last power, large-scale greenfield deal that was done on a commercial basis by the private sector was actually Azura. What has changed? We don't see those sort of deals again. That deal was partly successful for various reasons, right? One of which, perhaps more significant, was the presence of a PRG. Now, because there was a lot of, offshore investment coming in, right? Obviously, they had to mitigate political risk and all those sort of things. And indeed, if you sort of also look at the commercial structure and indeed the financing structure of that deal, which I was partly part of, you would notice that it was, partly well put together. However, today, what we tend to see are, investors and sponsors moving towards embedded power and smaller scale investments. What that does for them really is they're able to manage their risk on an end-to-end basis, right? Those large-scale power projects, right? There were a lot of parts that, unfortunately, were out of their hands for many reasons. Industry reasons. The power sector wasn't as, again, it's still evolving. It's still not that, where it should be in terms of maturity. But the bottom line is, as they move to that space where they are able to manage their risk a bit more, we've just closed one of the deals. Not mentioning names now, but we just closed one of the deals last year. It's an investment into a Codisco 20 megawatts power plant, right? Now, that particular deal has an end-to-end solution from gas pipeline down to investment in feeders. So for those sort of deals, we need to sort of replicate that across, disco level. What that also does is it helps to basically sort of free up the grid a bit more. So again, you probably do hear of grid collapses every now and then. It takes away some pressure from the grid and allows this investors go directly into distribution companies. Obviously, there's still the concern. There's still the concern around how effective is the commercial terms for deals like that. But the reality is it's been done. It was closed on a commercial basis, and indeed it can be replicated for other discos. Clearly, like the essay said, there are still challenges within the disco, the discos. But some of them, quite frankly, have stepped up. At least we feel, about 3 of them are probably bankable. You can do deals directly on a commercial basis, particularly for last mile investments in those discos, investments in feeders, and investments in embedded power. We also see a lot of interest in gas to power. However, the challenge there is we tend to see a lot of small deals, looking to monetize gas flare, etc. 20 million SCOF, $45 million, $20 million. We believe there needs to be some sort of coordinated effort in that space, right? And the banks, at the end of the day, they look at those deals and they sort of try to tie it to the off-taker. At the end of the day, what you see is they don't have a clear picture of how their funding would come back, right? So, and for gas, every gas deal is only as good as the off-taker, right? So if you look at a gas deal and you don't see the end-to-end payments from the off-taker, you just park it. So we see a lot of that. And I think at the, one other bit of recommendation and something we're pushing out there is the establishment of a Naira-denominated infrastructure fund. Because, and the reason we say this is, perhaps the best way to do and, sort of lend to energy infrastructure, particularly as the revenues are dominated in Naira, right, has to be long-term Naira debt. But it's not available at the rate that sort of supports this project. So there has to be, a framework which enables that to happen. I mean, there are a lot of infrastructure funds out there. They don't scratch the surface, quite frankly. And if you look at, where pension funds are as at today, 19 trillion, right? Think about even $1 trillion of that going into a fund, which, the private sector can come to refinance their project. So the commercial banks take the initial risk, due diligence, commercial, legal, technical, etc. Deal with the commercial or the construction risk, achieve commercial close, meet certain targets. Then they come to that fund to refinance. So patient capital will probably be a pension fund. So it's baked into the project from day one. So it's the sort of things that, we see a lot of these projects, some of them come, but they are just not at the level that can be financed by the private sector. Thank you.
All right, thank you very much. Please a round of applause to so I move on to the question now. How can we build more investors' confidence in the energy space? I mean, the PIA took too long, and here we are now. And now we are trying to move forward from, we have a new executive order as well. The new president is trying to drive a fresh narrative in the sector. But then there's this, there's a new president on board, but can we trust the person that is in charge now? Can we trust the process now that is going to be more efficient? And the timelines, most especially for contracts, which if we look at our competitors, a lot of them are putting shorter periods of contracts. And I mean, how can we just make sure that investors trust us more and we attract more funding to the energy sector?
Okay, thank you for that. Let me take it from the presidential order that were recently issued. One of the big problems, especially in the gas sector, basically seems like the opposite of what we should be expecting in Nigeria. in around 2007, 2008. One of the most popular statements when we're talking about gas is that Nigeria is a gas province with some oil in it. But whenever we make that statement and we mention of the almost 300 TCF of gas that we have, we don't remember certain technical problems that seem to exist in the industry. Technical in terms of geology, because our major gas fields are actually gas fields in small basins. So it's not as though we have one very big, I mean, it's not as though we have giant reserves that are by themselves commercial. We do have some of we do have some of those, but it's not as though they're so prevalent. So we have them in small fields, and it will require a lot of investment to commercialize them. In fact, it may not make sense to commercialize them individually, but then you need to bring, you need to build a gas gathering infrastructure to bring many of these things to a central point in order to effectively commercialize them. But then all these were slowed down due to legal consideration, regulatory issues, and the level of incentives that are available to get many of these activities go off the ground. The other, I mean, how that has impacted us down the line were the comments by NLNG sometime last year that they have Train 7, but they don't, I mean, they haven't secured gas for Train 7. Even for their existing contracts, they are beginning to declare force majeure, because sometimes they're doing, I mean, their production level is at 50%. Sometimes they declare a full force majeure. Also, there was a comment sometime last year at a conference in Abuja, petroleum conference, and we had the chief executive of SNEPCO mounting the podium, and she made a statement that from what they're saying, we're going to be having challenges with even domestic gas supply, and that it may be the case that by 2030, we may, I mean, Nigeria may have to start importing gas for its domestic consumption. And the reason for this is that coupled with the delays for the passage of the PIA, there has been quite a number of problems. I mean, so the delay for the passage of PIA, the unattractiveness, the general perceived unattractiveness of selling gas to the domestic sector. We've had a situation where there's not enough gas upstream to supply even domestic needs in Nigeria. So a couple of months ago, we were speaking with an investor, well, a local investor who needs gas for its power plant. And I was involved in this, and we went to so many places, to government agencies, quasi-government agencies, and the problem was finding sufficient gas that will come directly from producers and not from gas distributors, so that this particular plant can competitively generate power. It was like looking for a pin in a haystack. So there was that problem, and I know that that's a story that goes around. I mean, we have people calling us and saying, is there anyone who has gas immediately available? So although we have a lot of gas in Nigeria, it does seem that even for domestic consumption, there is scarcity. Now, with regard to domestic consumption, maybe we should go back a bit. Around 2008, when Gas Master Plan and all those things were being set up, we had a few 100 million SCOF being used domestically. Now, there has been tremendous progress based on the policy that had been implemented over the couple, because we now have a situation where almost on a daily basis, I understand about 2 BCF is being utilized domestically on a daily basis. But there seems to, as we have more utilization, the adoption for gas is growing, but the gas don't seem to be available, although we are a gas province. And that is why that presidential order is really, really important, and its implementation is important. Of course, the order is targeted at offering tax credit and tax allowance for producers, and also offering investment allowance for people who invest in gas production process. If it is properly implemented, if it is pursued doggedly, if the framework that are now being released that clarifies what we constitute hydrocarbon liquid, how it will be calculated, if all of these are being done, I think we can begin to rebuild confidence. People can begin to plan for 2029, plan for 2030, begin to look at projects again and say, and begin to have reasonable confidence that gas will be available when they need it. Can actually begin to sit down and speak to producers, and producers can begin to make investment decisions that will make gas available down the line. So I think in order to gain trust, I think the issue is watching how things play out going on from now. Thank you.
Thank you very much. Dr. Biodun Adedikbe, so what's your take on looking at the economy, the way we move? I mean, last year we did a GDP growth rate of about 2%, and now we are trying to move. We hope to do more than that this year, and we hope to leverage on the fact that oil price is also improving, and then we also need to take advantage of the gas that we are currently discussing about. Now, going forward, what's your outlook like for Nigeria's economy? If all of these things we are hoping to happen with the executive order happens, where should we see GDP going forward?
All right, thank you very much. Now, at the beginning of this year, before these directives were rolled out, we looked at a number of what we call outlook drivers. And then we came with a projection that the Nigerian economy will grow this year by 3.47%. That's in FM. And of course, that was premised on, one, the state of the economy as at the end of last year, and then of course looking at a number of changes, and of course drivers like the population, the youthful nature of the population, the median age, the place of digital, transition, and of course the place of telecoms, let me say broadly ICT, and then of course what is happening in agriculture. Put all of this together. So we came with that outlook of 3.47%. Now this is April, first quarter is already gone. So what has changed? A major thing that has changed are these directives we are talking about here today. So what will these directives do? Now, as I said earlier on, when we look at the oil sector, which is part of the mining and quarry, as one of the 19 sectors that contribute to our GDP, which of course was doing roughly between 5 and 6% of GDP. So if that changes, then we expect that we gain a lot more traction in contribution of mining and quarrying, where O&G is, to the GDP to start with. And then, of course, with what we see looking forward to the rest of the year in terms of the oil sector globally, the geopolitics involved, the issues in the Middle East, and of course, several other disruptions, about 8 of them actually, happening globally. So when we put all of this together with these changes recently, we are looking at the economy growing faster than what we projected. Now, in the budget, the federal government projected 3.88% for this year. And then, of course, the World Bank, IMF, when we entered 2024, projected 2.93%. But recently, in review of what has happened, they both came to 3.3%. So now, in the same manner as we usually do, we reviewed what has changed, and now also upped our expectation to about 3.72%. So we see it moving closer to 4% than what we saw at the beginning of the year. And the key thing then is to execute these directives. I think that's the principal part in there. Thank you very much.
Thank you. Let's give him a round of applause for So hopefully we should be expecting a GDP of about 4% before the year runs out. Okay. Mr. Obstockman, talking about energy efficiency in Nigeria, I mean, during your earlier comment, you talked about how you are trying to make sure CNG plays, you are looking to the direction of CNG and making sure it plays more role in the energy value chain. Now, how can we be certain of taking out the best we can from this executive order that the president is kicking off now? What are the role NIMAN members will be playing in terms of making sure that Nigeria is taking as much as we can from the entire value chain of our energy sector, and then having efficient supply in the market as well, and making sure that we have what it takes to whet investors' appetite?
Well, I think the key thing is, if you want to make a sector efficient, you need to invest. Yeah, because the downstream sector in Nigeria has been underinvested in for many years. The margins were low. It's just like a simple thing. Look at the trucks that are on the road. Yeah? I think the average truck probably in Nigeria that is in our industry, I'm not talking about the other trucks, is probably well above 10 years. I think that's reality. And that has all kinds of challenges in terms of reliability of supply, because all the trucks will break down more often than younger trucks. It's just a fact of life. There are health and safety issues. We've all seen some of these horrible accidents at times. And the thing is that but in order to do that, in order to invest, you need to see, it's actually the same as in upstream. You need to see a path forward. Yeah? And there the government plays an enabling role in. Yeah? Now, and I think the government has made some major steps in the upstream. I think we just need to make sure that the downstream doesn't get forgotten. Yeah, the refineries will come on stream. Yeah, and I've always said that they will add a lot of value to Nigeria. And don't only think about avoiding having to import, but in many other ways: jobs, technology, skills, etc., energy security. But you need to make sure the value they create doesn't get lost when you go down the value chain in the final mile. And I think that's one of those things we need to keep on. And we as an industry need to come to the government and say, look, help us with this. And it's not made to get handouts, but to make sure there's an enabling environment to make it work. And there was a comment about how many agencies you work with. Well, we've got the same challenge. And we've got state agencies that want to tell us how to do our business, while we also have the energy producer, our regulator. It's a problem. It's just one of those things. It's a challenge. It's not a challenge that's unsolvable, but it has to be solved. But the key thing is, if you want to make an industry efficient, you have to invest. And we need to make sure there's an environment that enables that. So that means that we do need to get at some stage out of the intervention that we have. So that there's full competition, everybody knows exactly what they can expect. There's predictability, not only in supply, but also in how you work economically. And then our members will invest. We want to work with the regulator. We want to make this industry more efficient. We want to make it safer. Yeah? And we want to give something back. And that's why Memon has set up the competency center. Because that's not just for our members, it's for everybody. Yeah, where we bring every knowledge point together to make sure that everybody gets to the same level, because that is also a point of it. So my argument is the government is doing all it can, and I think the presidential directives are very good, but we might find out as we go along the way that we might need one or two more, and we might, unfortunately, or fortunately, I don't know how it's been regarded as such, but we need to make sure that it works also in maybe the rest of the energy sector. So that we don't focus on one part only, and then it's a bit like with the energy. You get one part right, but then when you go down the value chain, actually the value is lost of what you have created. So that would be my short.
Thank you very much. A round of applause to you. So, I mean, we'll be taking questions, 2 questions each time. After I need to ask one last question to the remaining panel members, and that leads me to Clementine, are you there?
I am, hello.
Oh yeah, okay, great. So can you quickly, in 2 minutes, talk about investment in deep water investments, and onshore investments. Now we have an executive order that is expected to address some of the challenges, contract timelines, tax incentives, and a whole lot of other incentives as well. What are you looking at in terms of how soon should we start seeing increase in oil production from our deep water or onshore assets?
Oh, wow. Can anyone in the room answer that question? She'd be a better man or woman than me. I think if I can just pull back from your question a little bit and talk a little about the dynamic of onshore and deep water. Something that many of the companies that I speak to want to see is progress on the onshore and shallow water divestment processes. I know there are representatives from some of the affected companies in the audience, and I think what I would just like to say about that is that companies who are thinking about a big investment in the deep water and companies who are thinking about coming to Nigeria generally want to know that you can get your cash in, and they want to know that you can get your cash out, and they want to know what the processes for doing that look like. So there are deals, everybody knows which ones, that when they are finally approved will send a very positive message. And from that, I think you will see some more investment flow, both in terms of market entry and in terms of deep water commitment. There was some commentary from Minister Lokpobiri at the Petroleum Club at the start of last week, I think, where he talked about how there were IECs saying they would go forward with major deep water investment decisions once some of those onshore and shallow water deals have been signed off. So you're now seeing an acknowledgement of how that dynamic is working, which is very interesting for me and something I'm watching very closely. And I think as a follow-up to that as well, a lot of operators want to see some consistency in messaging. As I said, the directives have been very well received. At the same time, the introduction and then the revocation of the expat levy and the changing rules around forex repatriation for energy companies, both of those did cause some consternation around mixed messaging from government, if I can say that. So consistency of messaging at this point is really important as well.
Oh, thank you. Dr. Shino, looking at the local content development in Nigeria, I mean, the executive order also is expected to address some of the issues we have there. How can we maximize, I mean, we have less than, I'll give you 1 or 2 minutes to talk about that, maximizing opportunities in local content development.
Okay. Thank you. Well, again, the executive order on local content, in my view, emphasizes what is already in the local content law itself, maybe with a little bit of variation, because in the law, there's a provision that says that within a certain period, within a certain period, if you do not have sufficient Nigerian capacity to do certain things in the industry, you can get a waiver. But after that period elapses, it becomes difficult. In fact, there's no room. We're just trying to, there's no room to get a waiver. And I think it is from the implementation of this that this contract arbitrage system really developed. But apart from that, every other provision in that executive order re-emphasizes the principle of the Local Content Act, which is that the Local Content Act is expected to benefit contractors and service providers that have demonstrated capability and have done this and have demonstrated it by being able to show that they have equipment to perform those services. So basically, that is what the order has come back to re-emphasize. What we have seen immediately, okay, maybe I should talk about what we have seen in the past. What we have seen in the past is that we speak to service providers who are trying to bid for projects, and they are worried that they necessarily have to ally themselves with a local company. And the conditions under which they have to ally themselves, they have to sign a memorandum of, well, not exact, more like a JV. And under this JV, sometimes when you look at the NCDMB regulation, NCDMB regulation says that whatever they are signing should give a pathway that will allow the local party to have equipment ownership. And let me give an example. Let's say there's a deep water service to be done, and you need a drill ship. These are very expensive assets. Some of them, in fact, many of them running into hundreds of millions of dollars. And these are mobile facilities. They can work in Nigeria this year. Next year, they are going elsewhere to work. But the contracting for their work being made condition to, one, having a local partner, and then that local partner should have a pathway. How do you co-own a drill ship? Why would anybody want to do that? And there's the fear, you can see the fear in them that, well, if they don't do this, how will they be able to win the work? And they also know that they can't go back to their board and say that I'm signing this type of deal. So we've seen one or two of them just say, well, maybe they shouldn't just participate in this particular bid. So having this type of provision now, hopefully will help. But I think there's still some more work to be done by the NCDMB to look at those criteria that they have set. To look at those criteria they have set and become more asset specific. Maybe those criteria can work for some type of assets, but not for a drill ship, not for a vessel, not for some very critical assets that are very rare, really. That are very rare. It doesn't make sense that that every country will possess one each. Otherwise, the market won't be able to. In fact, the market globally won't be able to pay for the assets. So they still need to examine some of their criteria and basically rework it. That's what
Thank you very much. Thank you all for your time. A round of applause to each and every one of them. They've been able to dissect and even educate us all on some of the implications of this new executive order. So we are pressed for time, and my sincere apologies. We might not be able to take any more questions now because we are really, really pressed for time. Again, my apologies. I call on the editor, Mr. Tayo Fagbele, to give his closing view.
Thank you. Well, it says a communique. Okay, yes. Photographers, you want to do your thing? Gentlemen, thank you. We'll have a group photograph. Publisher, Mrs. Vahijan, please. Thank you. I think, can we switch the light off? Oh, well, I think. Yes. Sorry, Ms. Wallop.
Hello.
Yeah, I think we'll also have a picture. Please hold on. We'll have you in the picture as well.
Okay, no wahala. Thank you.
No, I think it won't work. It won't work. No. So apologies, Ms. Wallop. Maybe next time you're in Lagos, we'll have a picture with you.
You will have a whole Owambe just for my visit. Thank you very much.
Exactly, a whole Owambe for you. Thank you very much, ladies and gentlemen.
I'll show it be as well,
No wahala.
Eshe, thank you for your time.
All right. So thank you, ladies and gentlemen, and do enjoy the rest of your day and your weekend. Thank you all.